What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we'll take a look over here at the Bitcoin price chart and the altcoin market coming off of a pretty decent pop that happened yesterday during the Federal Reserve interest rate hike to the federal funds rate. As Jerome Powell was speaking, we saw that the price of Bitcoin had initially fallen right when Jerome Powell started speaking, and then whoop, up and away we went. And then in the evening time, up and away we went a little bit more. As the day is going on, now we're starting to kind of pull back in here, and then seeing a really mixed day over here on Wall Street as you have the NASDAQ up 2.5%, while you have the Dow Jones down about 0.5%. So Dow Jones is down about 160 points, whereas the NASDAQ is just flying, with things like Facebook up 22%, Coinbase up 14%, Google, Arc, Amazon. Big moves happening here in the stock market as we have reached historical precedent for when the Fed typically does stop these hiking cycles. And the wording that really came out of the Fed kind of gave some assurances that the end is near. Historically, as we see the federal funds rate and the 2-year Treasury yield and the 10-year Treasury yield get to an intersection point, that is typically the halt of interest rate hikes. We saw that back in 2006 through 7, and we saw that back here in 2018 and 2019. And well, here we are right now. The federal funds rate has officially stepped above both of them, now at 4.5% to 4.75%, whereas you have the 2-year Treasury yield sitting there at 4.09 and the 10-year at 3.38. Historically, the marker of when the hiking season comes to an end. And while Jerome Powell really sounded pretty dovish there during his meeting yesterday, saying that disinflation is happening, he's optimistic that inflation is cooling off. Too early to sit there and say they have to completely take their foot off the gas, but that signs are looking optimistic. So just the narrative we needed for prices to move up. And of course, the Dow Jones still not able to get through that 702. In this video, we'll take a look at Bitcoin. We'll look at signs for the bottom. So we spent a lot of time over the last 2 weeks really talking about getting back to the range height up in here, which we're still sitting right in here. We haven't gotten through. Typically a lot of historical danger when you get to these things that you could ABC off of them. So that's still, of course, in the back of my mind. And when we look at like the weekly time frame in here and you see the things going on with the moving averages in here, we are at a pretty critical moment that we talked about a long time ago, that this moment will eventually come, and we're going to have to see how the market's going to react when we get there. Is that Bitcoin has never gone and spent a prolonged amount of weekly closes below the purple one, the 200-week moving average. It's always just kind of found support there on top of it, wicked through it during the C19 sell-off, but still able to hold it. This is the first time to close so much time below it, and now we're back here. So this is a first time for Bitcoin to go back and test the 200-week moving average as a resistance. So to see if we're going to actually break through this thing right now. But my thoughts are still optimistic for retracement, whether or not that takes a while to have to work out some pullback here first. So maybe these moving averages pulling down, that's where we find some resistance. We attempt to go through, we still can't get through. You get your ABC, breakthrough, and then off and away you go. But there's still a lot of like wall of worry that we're climbing here right now, and whether or not this is the actual bottom. So I showed something in a live stream too, and I'll show you this stuff as well. When we like really zoom out, when we were looking at the peak of Bitcoin back in 2021 and early 2022, is that we could see this coming. So even though we were getting this cross here in January of 2022, that our MACD was crossed over, our bearish divergences were happening here on the relative strength index, the market still believed we were going to see $100,000 in January of 2022. But so you're saying these things don't look good. But now when we look at this monthly time frame and we really zoom out in here, we saw that the 40 level did end up holding in here on the relative strength index. So that is a level that needs to hold in order for a market to remain bullish. Here we are in Fidelity. In an uptrend or bull market, the RSI tends to remain in the 40 to 90 range, with the 40 to 50 zone acting as support. During a downtrend or bear market, the RSI tends to stay between the 10 to 60 range, with the 50 to 60 zone acting as resistance. So in order for the market to remain bullish, we need to see the 40 to 50 zone acting as support. So we look on here and we say, all right, so what's happened each time? We can see that 44, that 43, and this time 40 right on the button comes in to save the day, as the RSI still continues to hold on the monthly time frame. And then you look over here at the MACD to see the moving average convergence divergence start to flip in here. What happens each time this flips on the monthly time frame is that we see that the bottom is already in. Of course, this time we had our FTX sell-off. We had a little bit more of a dip happen in there back in November, but we could see that the bottoms were already in, and this was the beginning of the new trend each time we dip down here with these RSI levels, and each time the moving average convergence divergence, or MACD, started to flip as well. So we've obviously been in that flip for a long time in here, but one of the other things too that I pointed out in the live stream is the stochastic RSI. And this indicator essentially oscillates between 0 and 100, and it's basing it more off of relative strength data, and it applies a formula to it to show swings. But outside of getting into the technicals of how this formula is calculated, what we do see in this oscillator is that after it comes down and it spends time near 0, eventually once it starts to turn its way up here on the monthly time frame, we are moving our way off and away. And that also occurred back in 2014-15, 2018 and 19. And well, as we could see, we're starting to finally work our way up here on the oscillator after being stuck down here for an extended period of time, as we were in 2018 and as we were in 2015. So you have RSI holding the 40 level, you have the MACD flip, and then you have the stochastic RSI turning up. All of these on the bigger time frames. Those are good, but we also know we are dealing with a couple of different things that we were compared to those different times, in particular, really when it comes to the moving averages. As we can see right here, we're fighting against the 50-month moving average for the first time. We've never had to do that before in Bitcoin's history. And well, 50 months is really close to 200 weeks, which is why we're right there at about the same thing here when we look at the weekly moving averages. We've never had to battle back against these at the same time. So this is something that is different from those, even though we have the monthly indicators and oscillators all giving us the positive signs of what you're looking for when things to turn up. We do know we have some headwinds right here that are slightly different from what we've had to deal with these past times. So it's like, yeah, this price action, it's been exciting, but we know there's like this wall of worry that does sit right here. Even though we've been talking about this level and structurally how these things tend to play out in here, we even see some more confluence of that happening right in here when looking at the weekly moving averages and when we look at this monthly, that we're still here, right? Obviously, it's the beginning of the month. It's only the second day of the month. You get a big fat clear through there, great. But imagine if you pull up here and then you put a big fat wick down below it, and then we close red and we close underneath it. So we still have 26, 27 more days until this thing is going to close. And then we've got these ones coming in here on the weekly time frame. Now, the good thing is Ethereum, look, there's your 200-week moving average way down here, right? It cleared through it 2 separate times and got back through it. Looking at the monthly ones as well, there's your 50. It went underneath it a couple of times and still able to clear right back through it. The same goes for the total altcoin market cap and total 3. They all did dip below these 50-month moving averages and the 200-week moving average. A little bit of fear driven there, right? Still getting back through on these, and really Ethereum really already back up. But we know what's there for Bitcoin. We know it's never had to deal with that. And we do know the altcoin market's done this many times before. This is not unusual for the altcoin market to be dipping below these moving averages. It gets below them all the time. Ethereum went way below it last time. We could even draw this out right in here, right? You just imagine that's probably what that was looking like back in there. Ethereum went way below last time. So it's normal to see that over here. We just haven't seen that in Bitcoin, and we know we've got kind of the confluence of those two coming at the same time. So it's just going to be kind of waiting to see how do we react to this, because we haven't seen this one before for Bitcoin. But what we have seen on all these indicators is that when they did this, we started marching our way up. So lots of things are favorable. But it's just about saying, are we really out of the woods yet with that coming in here when we haven't had to deal with this one before? So we just really need to get through this moment, which is what I've been saying for weeks, not even looking at the moving averages, just focusing really more on price structure and behavior of how these things typically end up playing out, is that you do see pullbacks in here. So we're just kind of waiting. Are we actually going to get that? Or can we get to some like clear breakthrough all those moving averages and through the resistance level that's been placed right in here? Because that's your typical normal play in there. So still waiting on it to get an answer. But moving along, I actually showed this on my Twitter last night, how really funny it is to see the altcoin market behaving in the manner that it has on how it's actually been reacting to the daily moving averages. We can see how it found resistance up here at the 200-day, support at the 100-day, resistance at the 200-day, steps back to break through it, comes back to back test the 200-day, and then now we've been marching our way, continuing on beyond it. So I think one of those things that will kind of help me lay down my wall of worry is really to actually see the altcoin market step up above here. If we got like into the $460, $470 billion for total 3, or up in here at, 720, 730 for total 2, I'd be totally fine with us getting there and then staying there for months. I'd be totally fine with it. Because then this would help me like get that raging bull right back. As we know, down here talking about imminent breakouts and surging markets of gloriousness incoming. Well, we got that. Now it's time to be like, all right, now we're at the point of, geez, this is our sketchy zone. Let's get some more juice behind it, so we can like build a new consolidation zone rather than thinking we're gonna need to come all the way back down here. So let's go. Well, we can see total 2 starting to move back up a little bit right now as I'm recording. So hopefully we see some action today. It's Thursday. We've got one more day left in the week. I had a ton of fun with you guys yesterday as we were watching Jerome Powell speak and watching the price action live. I tell you guys, that's what I do every single time when those meetings are going on. I've got one monitor. I operate with 3 monitors, so it was real weird to kind of have to like operate everything into one zone on there. But that's what I'm usually doing. I've got Jerome Powell taking up a whole monitor. I've got the Dow, and I've got Bitcoin, and I'm just sitting there watching to see how things all play out. And we kind of got to live through that yesterday. It was pretty fun. But it seems the markets have reacted pretty favorably to it now, with the NASDAQ up 3%. Look at Meta up 25%, and you have Coinbase up 20%. So all eyes and all wonders over here on Bitcoin. Will we get through? All the monthly and weekly indicators look absolutely awesome and phenomenal. And for those who are curious, it's the same for the altcoin market. And the altcoin market did actually hold its low, and it is above the 50-month moving average. But the oscillators doing the same things, same support levels, same flips in the MACDs, doing the exact same thing as Bitcoin. The only thing that's really in the way right now is this whole level right in here, and then those moving averages that are all coming in here at the exact same time. So this is our big zone at this time. And still, for 2 weeks in a row, it's kind of what we're talking about in here. But I also wanted to show you something I talked about in the live stream, because I know not everybody watches the live stream. All those monthly indicators, all that monthly confluence that's happening in there of what we saw in 2015 and what we saw in 2018. So looking good, just need a little bit more. For those who missed it, I did actually post the second newsletter, the premium newsletter for January. I have a link in the description of this video to it. But I was talking about the emotions in a volatile market, and including a lot of my actual journal entries. I talk about an emotional log from going through this whole moment right in here for Bitcoin back in 2018. I have very well documented emotional log of what it was like being me in this moment, what it was like watching the retail sentiment, people thinking it's going to go lower, me thinking it's going to go lower, and just what my emotions were like during the whole step of the way in here. And I have good entries in here from this moment right now. And I'm not quite sure if we're actually right there yet on Bitcoin, or if we're more so in something like this right now. But even in my emotional log right in here, when this moment happened here for Bitcoin, the whole market, and including myself in all of my emotional log entries, did not believe it, felt no emotions from it, felt no excitement, no thinking that, hey, this thing's going to keep going for forever. It wasn't until getting to about $7,000 at that moment where I started getting a little bit more optimistic. And you can just kind of see that progressing through my journal entries, that even in this phase right here, it was still super doubt and pessimism that this is, I don't trust this thing. I've seen this happen too many times before. We go up and then it just turns over on itself. And so even if we are here, right, in our moment of returning back upwards right now, that is what sentiment was like at this moment. It was not until, like, if we got one more breakup like that, suddenly there would be a sentiment change that happens pretty dramatic right there. And then give it one more leg, and that's the leg of euphoria. So we're nowhere near what like the euphoric phase of this whole move up could be like in a retracement. And I went back and just really shared a lot of my journal entries of how depressing it was in here. And I don't think people talk about that a lot. I think we do a good job kind of like blocking that out of our memory of what that was like. But that, what we witnessed happening in here, and the pessimism and the $12,000, $10,000 to $12,000, everybody looking for the lower prices, that's precisely what it was like back in here too. And you could see it in my emotional log, sitting here saying, I'm making nibbles down here, I'm buying down here, but man, I think we're going to get $2,000. I think we're going to get $1,200. I think it's going to get really bad and really ugly. I'm still buying it, and I'll hold it till zero if I have to. But man, I'm sick of this. This is terrible. I hate this. I'm depressed. And then I don't trust this rally. It's done this 100 times. Then, whoa, wait a minute. Hold on. Something might be happening. This is kind of interesting. And then, oh my gosh. Oh my gosh. And then, boom, it reverses, right? So we're nowhere near there. I think we're still, and a lot of people still saying, I don't trust this thing just yet. Give it one more big break. Then you start getting the, oh, wait a minute. Then you get the euphoria phase. So just thought I'd kind of share that and share my logs with you guys in that kind of, for those who ended up reading that, understanding, where do you think we are in this thing right now? Does it kind of feel like there's a lot of people that are still kind of like, I don't know whether to trust this or not? I think that's kind of where we're at right now. And even me, my own sentiment, I feel there's still some things that I'm kind of distrustful about with this level right in here, kind of waiting to see how this one's going to play. And well, we have technical indicators on here to show us why people would feel that way. So just having to get through that moment right now in the market. But otherwise, with what we have going on in here and all these technical indicators, all these behaviors happening in here, I'm incredibly optimistic. But boy, we just got to get through this moment. And I think we got the writing on the wall yesterday from Jerome Powell and the Fed that the hiking cycle is very near done. And the historical precedent set by Treasury yields and the federal funds rate says the same thing. This hiking cycle is getting close to done. But one thing to kind of note too, right? Like when you look at these hiking cycles, is that when the Fed is pivoting, it's historically not that good of a thing. At least like in the early phases of it, it's okay in the early phase of the pivot. But like what comes shortly after the pivot, after just a couple of months of the pivot, then we go into the great financial crisis. And then in here, right, we flatten out for quite a while, but then after a few months, 6, 7 months of the pivot, boom, we go into C19 crash. But historically with the pause, things are okay with the pause. But, you look in here, right, once we're pivoting, we're going into, the dot-com bubble crash. So typically once the rate cuts start actually coming, it's signaling something bad is on the horizon. The flattening out of the rate hikes or the pausing of the rate hikes, not necessarily so bad. But once we start actually cutting, it's not the greatest thing. So at this point right now, what are we kind of looking forward to? That, hey, it looks like a pause in rate hike seems to be coming around the corner pretty soon. But that, whenever we get to the point where they're actually going to be cutting, we kind of have history to look back on as well to say, well, that was usually the precedent set before big crash ended up coming too. So we'll remember that. But right now, that's not what we're looking at. So either way, seems like pausing isn't too far away. And as for the rest of today, like many, probably just be sitting here watching paint dry to see if we can get ourselves a break out of our range here on the Bitcoin price chart. Otherwise, if you're looking for something to do, you can check out the newsletter that I published. I also recorded an audio version of it as well. It's 27 minutes long. Me reading, narrating it, and explaining the charts that I posted in here. There is a link to my premium subscription newsletter right down here in the description of each of my videos. If anything big happens, I'll post over here on Twitter. Otherwise, I hope that you have a wonderful day. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.